Ladies and gentlemen, boys and girls, welcome back to Strongman Personal Finance. I am Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser, and hater of stupid stocks and losers on YouTube that convince people to buy into dubious, worthless investments that are going to hurt their finances in the long run. If you like that, please like the video and subscribe to my channel. Now, today we're going to talk about one of the dumbest stocks that I've seen recently, which is Virgin Galactic Holdings. Now, this company is one of those new and exciting companies that is trying to launch people into space so they can go see the Earth and, go fly around in outer space, which is cool. I'm not going to deny that. I wouldn't mind going up in space and seeing the Earth, seeing the globe. But it's not just about excitement, ladies and gentlemen. It's also about profitability. If you're going to put your money into a company, you want to see some kind of return in the future. Now, if the company's been bleeding money so far, well, there's a baby crying. I don't know if you can hear it. If the company's been bleeding money so far and its future prospects are still kind of iffy, it's very highly speculative to invest in the company, especially after its recent moves. So let's go look in Robinhood Stock, obviously the best brokerage of all time, very tax efficient. And let's see when this company was listed. So this company went public via SPAC. I'm noticing basically every stock that Wall Street Bets and all the clowns love are SPACs. But this company went public on October 25th, 2019. And you can see there's been some pretty significant volatility. It goes up, then it crashes, and it goes up, and then it crashes, and it goes up, and then it crashes. Now, this is because the company is so highly speculative that the stock moves very rapidly based on changes in news or, exciting stories or whatever comes out. Now, in this case, I believe Virgin Galactic finally got approval from the FAA to actually launch people into space. So that's why the stock went up in the last day, 38%. It's a pretty big gain. Now, the question is that gain sustainable? And is that gain based on fundamentals, or is it based just on a gut reaction to exciting news? Which I think it's the second. So here's why I think SpaceX is complete freaking trash and you should not put your money into it, especially now that the stock just skyrocketed. Now, in the world of capitalism, which is a beautiful economic system, if you're a communist, you can go to another channel and learn how to steal people's money. We don't do communism here. But in the beautiful world of capitalism, you have competition. Companies compete with each other to gain market share. Now, Virgin Galactic, which is going to launch people into space, also has competitors. You got SpaceX and Blue Origin. Blue Origin is like Jeff Bezos, Amazon, his private little company that he's forming. And SpaceX, our hero Elon Musk. Now, since this company is facing competition, they're not going to capture the entire market share of space tourism whenever that happens. And here's one thing that jumped out to me. So I was reading this article and it was kind of talking about what each company plans to do, yada, yada, yada. Now, in this report, it says UBS in a report last year estimated that space tourism with both suborbital and orbital together has a potential market value of $3 billion by 2030. Now, keep that $3 billion in mind because we're going to jump back to Robinhood Stock and we're going to see what Virgin Galactic's current market capitalization is. So in 9 years, the space tourism industry will be worth $3 billion. Now you look here. What is the market cap of Virgin Galactic right now? And it's not even launching people into space. It's not even like sending tourists up into space yet. $14 billion. So think about it. In 9 years, it's going to be a $3 billion industry. And this company has competitors. So right now, this company is valued at more than 4 times what the future earnings discounted at whatever rate is going to be in 9 years. That's pretty freaking stupid, okay? This stock is massively overvalued just based on that metric, just based on that estimate. Now, I could be wrong. Maybe the space tourism industry will be a lot bigger. But even then, with competitors, 14 billion market cap seems pretty freaking ridiculous to me. I wouldn't be surprised if the stock pulled back pretty significantly over the next couple of weeks, especially with all the morons in Wall Street Bets. But of course, you know me, I like to look at the numbers. So I pulled up Virgin Galactic's 10K, their annual financial report. Now, their last annual report covered through the fiscal year of December 31st, 2020. They probably released it in like March because it takes people time to generate their reports. But we're going to go ahead and look and read just some information about this company. What do they do? Who are they? What do the numbers look like? So their business. So they were formed in May 5th, 2017 as the Cayman Islands. Brought public via SPAC. Blah, 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 blah. Overview. We are a vertically integrated aerospace company pioneering human space flight for private individuals and researchers, as well as manufacturer of advanced air and space vehicles. Virgin Galactic branded customer experience. We are developing a space flight system designed to offer customers, who we refer to as future astronauts, a unique multi-day transformative experience. This culminates in a space flight that includes views of Earth from space and several minutes of weightlessness that will launch from Spaceport America, New Mexico. Okay, that's pretty cool. Now, I read somewhere, here we go. So right now they have approximately 600 reservations with over $80 million of deposits. So people have already started booking, future trips with this company. However, I read in here that these are all refundable. So just because they have $80 million on the books, which they can't recognize as revenue yet because they actually haven't performed the service, those people could potentially cancel their deposits, especially if this company runs into any issues in the future. So you want to keep that in mind. So we kind of know what the business is. They have a spaceship. They have a hybrid rocket motor. Spaceport America. Okay, that's cool. Let's go look at some of the risk factors of this company, because this is going to tell you some of the potential risks that I've already addressed and more. So you want to read the risk factors. Very important. Now, the first one. We have identified a material weakness in our disclosure controls and procedures and internal control over financial reporting. What does that mean? That basically means their accounting staff sucks at keeping proper records of their accounting transactions. Now, that's pretty bad in my opinion as an accountant, because if you can't trust the numbers, if their accounting staff sucks, how are you going to trust anything they put out, all right? You need to be able to trust the numbers that companies are putting out in order to make an informed decision about whether to invest in them. This right off the bat is a little sketchy to me that they suck at financial reporting. But thankfully, I believe the auditors caught it. Next risk factor. We have incurred significant losses since inception. We expect to incur losses in the future. We may not be able to achieve or maintain profitability. All right, so you look here, and every year they're just growing their losses. So in 2018, they had a $138 million loss. Next year, $215 million loss. And next year, $644 million loss. Now, this doesn't mean the company's going to fail because they keep having losses. But what it does mean is that they haven't demonstrated a proven business model that actually makes money. This shows this company is still highly speculative. And one simple mistake could potentially screw you over if you decide to invest in this company. I'm not buying this stock. All right, let's see what other risks. COVID, whatever. Everybody has that risks. The market for commercial human spaceflight has not been established with precision. It is emerging and may not achieve the growth potential we expect. Now, based on that report that we looked at, or article that referenced a report, the future market in 2030, in 9 years, will be $3 billion. And this company's market cap is $14 billion. And that doesn't even include its competitors, who are also going to have a share of the market. Wow. See what else? Any more risk factors that really jump out to me? We may not be able to convert our orders and backlog or inbound inquiries about flight into revenue. As of December 31st, 2020, our backlog represents orders for approximately 600 future astronauts for which we have not recognized revenue. Deposits are largely refundable and reservations may be canceled under certain circumstances without penalty. Wow. See that, ladies and gentlemen? A lot of risk baked into this company. They haven't even earned the revenue yet, and that future revenue can be taken away in an instant if something goes wrong. Like, imagine if one of their freaking shuttles explodes and it kills some people. That's probably going to wipe out the entire business. And then Blue Origin or SpaceX will just come in and fill the void. So much risk, ladies and gentlemen. So much risk. All right, so that's some of the risk factors. Let's go and look at the financial statements. Now, you should also read management's discussion and analysis. I don't feel like doing that right now, but that's item 7 here. That's basically the management talking to you about what their plans are for the future, and they kind of talk about their operating results. But I like to go directly to the financial statements because I can read them because I'm a certified public accountant. and we'll see what they look like. So the balance sheet, okay, I briefly looked at the balance sheet. Basically, they have a lot of cash because they're raising money through probably stock or debt issuances. They're not going to imminently go out of business because you look at their current ratio, they have $727 million of cash and only $115 million of current liability. So they're not going to go out of business anytime soon. Now, one thing you want to pay attention to is dilution. The more shares that are issued, the less future profits you will have as the owner of one share of this company. Now, let's see how the shares issued. So in the end of 2019, they had 196 million shares outstanding. And then by the end of the next year, they had 236 million shares. Now, I predict this trend is going to continue because this company isn't making a profit. And the only way they can survive if they're not generating revenue, and remember, those advanced deposits are not revenue because they haven't performed the service, and those are refundable deposits. If they can't perform and they're not making money, they're going to have to issue more and more and more and more shares just to stay alive, all right? You see how it's pretty risky to invest in a new company, especially in such a highly speculative industry like space tourism. I mean, I don't knock them for trying it. I think it's pretty cool, but when it comes to investing, it's not about what's cool or exciting. It's what makes the moolah, the cheddar, the check, all right? Let's go look at the statement of cash flows. So right off the bat, I always like to look at net cash provided or used in operating activities. And of course, every freaking year, this company is bleeding more and more money. They burned $145 million in 2018, almost $210 million in 2019, and $233 million in 2020. Jesus. And of course, net cash provided by financing activities. That's positive, which means they're probably issuing debt. Well, that means they are issuing debt and stocks to finance their operations. They're basically living off the money that you're giving them by buying their stonks on Robinhood, all right? So in 2018, they just issued some debt. 2019, they issued a decent amount of common stock. I mean, that's when they went public, I believe. And of course, they issued more common stock in 2020. So they're just living off your money that you're giving them, and they're not producing any revenues at all. This company's garbage, guys. This company's trash. You don't want to put your money in this company, okay? The risk reward ratio is bad. You may get lucky, and maybe this company somehow finally starts generating revenue, and it finally starts sending people into space, and maybe the industry grows more than you expected, and maybe they crush all their competitors. But there's a lot of obstacles that are standing in the way of this company really giving you a good return on your investment, all right? That's it. Don't put your money in this garbage, especially now after this stupid run-up, probably resulting from Wall Street Bet's morons and clowns. Just stay back. There's better opportunities out there that will give you better assurance that you'll actually make money from your investment, all right? Like the video, subscribe to my channel, buy my book, Stop Being a Broke Loser, and y'all have a wonderful, delicious day.